Good morning, good afternoon, and of course, good evening, traders from across the globe. Welcome to my 2535th edition of Short-Term Trading Live with Oscar. Good evening, traders, and thank you for tuning in. So, video number 2535 coming at you on a Wednesday evening for trading Wednesday evening through Thursday, February 22nd, 2023. Before we get into this chart, please know that this is a very risky game. Never ever trade anything without putting your stops in first. A stop is your best friend. It will save you when you freeze and don't get out of a bad trade. Put your stops in and make sure they go in first. All right, so what's going on? This chart's got a lot on it for trading on Thursday, Feb 22nd, so let's take a look. It's the E-mini S&P Daily Bar. First things first, we know that we had this big double top right here. Top one, double top, top two, and ES is still below this big double top. All right, so we know that. You also now have a reaction to the double top, which would be, in my opinion, what you're seeing here. Well, not quite there. What you're seeing here with this channel. So, top goes up, made, comes down, hits this line, makes a second top. That's our double top. And we go into this channel, purple channel, reaction from the double top. My job is to decipher day by day what to do, as well as have a longer term view. For day trading only, forget the longer term view. For day trading, we've got a sell signal. And if we take it, we're going to be extremely nimble. If we even decide to take a sell trade, and here's why. Check out this chart. There's a lot on here, so I want to show you. If we're going to trade at all, we're going to be very nimble. Why? All right, so you're looking at the E-mini S&P Daily Bar. First things first, look at this green dotted support line. It goes all the way back to the lows. Boom. We're about to run into that area now inside this green circle. You've got three very important averages all coming together, culminating right there. You've got the support of the bottom of the channel culminating right there. So, support, big green trend line. Support, bottom of the channel. Support, three big averages converging. You've got that. I call that a lot of traffic. All right, so that's why I want to be nimble if we go short for trading E-mini S&P on Thursday. But there's more. Left side of this blue line is 2022. The right side of this blue line is 2023. On the left side of the blue line, the market goes down on average 4 days in a row. See the 4 red days inside here? 4 days. You had once when it went down 3 days, but mostly 4 days in a row. You get 4 red down days in a row, then the recovery starts. 3 days in a row, recovery. 4 days in a row, recovery. But 4 is the number in 2022. We were also raising interest rates at 0.75 and 0.50 at a time during this period. The Fed was raising rates at 0.75 and 0.50. Now we're going to come to 2023. The Fed is only raising rates by 0.25. They started at 0.50 at the beginning of the year right here, and now they're only doing 0.25 raises. And what do we come up with? You almost never drop more than 2 days. When you do, it's 3 days only since the year began, and the Fed shifted to a smaller policy, a smaller rate raise policy. 3 down days here. 3 down days here. That's it. Everything else in the middle is 2 only. 2 down days here. 2 red days. That's about it. You get 2 down days only. Now, back here, you would get 2, 3, 4. You know, almost like a pattern. 2022, the raises were greater. 2023, the raises are less. 3 looks like maximum, and today is day 3, Wednesday. I don't know that I want to get caught short down here. There's too much traffic, and the pattern, until it stops repeating, is 3 days only before the cavalry comes in, as you can see here. 3 days down, the next thing is higher, right? So we go down for these 3 days, and the next thing that happens, you go higher. Okay? We went down for 3 days. I don't know, until the pattern stops repeating. We probably will bottom tomorrow and start to move higher. So because of all the traffic, all the support, the averages, the support here on the green line, the support here on the purple line, I will be very nimble if we get short at all. And if we don't trade, I might like it even better, so we can find out what the market wants to do down here on its own. So that's what I had to show you. Be very careful if you're going to jump on a short trade for S&P tomorrow. It might start off lower, but with all of this support in these circles, it could end up then catching its legs and moving higher. Be nimble if you're getting in. If you're not getting in, be careful anyway, because sometimes you get tempted, and make sure that you keep your emotions out of this game. Join me at livewithoscar.com. It's my free room. It's really livewithoscar.com. It's my free hangout room where we trade when the markets are busy and we don't trade when it's slow. And then remember, emotions out. How do you do that? Well, yell this out often as you can. Are you with me? Stop, start, in. Emotions are out. Traders, thank you so much for tuning in. Good luck out there. I will see you all at livewithoscar.com.